Hello, and welcome back to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is November 27th, 2025, and we are diving deep into Apple, ticker symbol Apple, which has just broken out to new all-time highs. The current market is a mix of extreme optimism and significant underlying risks, so our job today is to cut through the noise. First, let's cover the news that's been driving the conversation around Apple lately. On the bullish side, we have continued momentum from strong iPhone 17 demand, particularly positive sales signals coming out of China. MarketWatch reports that Apple is even set to overtake Samsung in global smartphone shipments this year, a huge milestone. Analysts are also generally upbeat about Apple's long-term positioning within the AI economy. However, the bearish headlines are just as compelling and cannot be ignored. Perhaps most notably, Warren Buffett's Berkshire Hathaway trimmed its stake in Apple by about 15% in the third quarter, which undoubtedly caused some selling pressure. Adding to the concerns, Apple recently lost a patent case regarding its watch sensors to Massimo, resulting in a $634 million fine. But the biggest financial risk on the horizon is a potential $38 billion fine from an antitrust case in India, a staggering number that the company is currently challenging. Furthermore, the narrative that Apple is lagging in the AI race persists, with some reports suggesting it's a year behind competitors and may need to rely on Google's AI. So, with this conflicting backdrop of strong performance metrics and massive external risks, let's turn to the charts to see what the price action is telling us. Looking at the daily chart, we can see a powerful uptrend that has been in place for most of the year. After a period of consolidation in September and early October, the stock began a very aggressive rally, taking it from the $245 level to where it is today, near $277. The price just breached its previous 52-week high of $280.38 yesterday and is currently consolidating right at this critical breakout point. This is technically a very bullish signal, but we need to see the price hold these levels to confirm the breakout. The first key support level to watch is the top of the previous trading range, right around $276.69, a level cited in a recent Benzinga article. Below that, the next significant support zone lies between $266 and $269, an area that was tested multiple times in early November. That drop to around $267 on November 17th aligns perfectly with the news of Berkshire Hathaway reducing its stake, showing a clear correlation between major news and price action. A more substantial support level can be found around $255, which roughly corresponds to the 50-day moving average mentioned in recent technical reports. But the most dramatic price action this year occurred back in the spring. If we zoom into the chart from March to May of this year, we can see an incredibly sharp sell-off followed by a V-shaped recovery. In early April, the price plummeted from around $223 all the way down to its 52-week low of $169.21. The speed and ferocity of the subsequent rally from that low shows that institutional buyers saw immense value at those levels. This establishes the $169 to $172 range as a massive long-term support zone for Apple. It's a reminder of the stock's volatility, but also its underlying strength and resilience. Now, let's examine the more recent price action on a shorter time frame. Switching over to the 1-hour chart, we can get a clearer picture of the recent breakout. You can see the well-defined uptrend channel that has guided the price higher since late October. Notice the tests of the lower trendline support, especially around November 7th and again on the 17th, near that $267 level we discussed. The price then consolidated in a tight range before powerfully breaking above the $276 resistance level on November 24th. This breakout occurred on significant volume, which adds to its credibility. Since the breakout, the price has been hovering between $275 and the new high of $280.38. This sideways movement is constructive, suggesting the market is absorbing the recent gains before a potential next leg up. For a closer look at this immediate consolidation, we can switch to an even shorter time frame. On the 15-minute chart, we can analyze the price action of the last few trading sessions. Here we can clearly see the spike to the all-time high of $280.38 on November 25th, followed by a quick pullback. Since then, the price has been trading in a very tight range, building a small base. The immediate short-term support is the low of this range, around $275.25. The immediate resistance is, of course, that all-time high. A break above $280.38 on strong volume would be a signal for continuation, while a break below $275 could see the price retest the breakout level around $272. This intraday action shows indecision as traders weigh the bullish breakout against the backdrop of potential negative catalysts. So, let's go back to the daily chart and summarize what we've learned to build a forward-looking thesis. To recap the key price levels, resistance is the all-time high at $280.38. Above that, we are in price discovery. The most immediate support is the breakout zone from $275 to $277. The next key support level is the recent consolidation area around $266 to $269. Below that, we're looking at medium-term support around $255 and major support near the October low of $244. Now for some unbiased predictions. The bullish scenario, which I see as having about a 60% probability, is that this breakout holds. If Apple can build a solid base above $277, the path of least resistance is higher, with the psychological level of $300 being the next logical target. This would be reinforced by continued strength in the broader market and a lack of any new, majorly negative news for the company. The bearish scenario, with a 40% probability, is that this is a bull trap or a failed breakout. If the price fails to hold $275, and especially if it breaks below the key $266 support level, we could see a swift pullback to the $255 area. This would be reinforced if negative news, particularly any concrete developments on the India antitrust fine, comes to fruition. A headline confirming that massive fine would be a significant catalyst for a deeper correction. The key thing to watch for in the coming weeks will be any official announcements regarding Apple's AI strategy, which is their biggest perceived weakness. Also, keep a close eye on trading volume. We want to see higher volume on up days and lower volume on pullbacks to confirm the bullish trend. This concludes our analysis of Apple for today. We have a bullish technical breakout clashing with some serious fundamental and regulatory headwinds, making this a fascinating stock to watch. Thank you for tuning in to Explain the Charts. Please remember, this content is for informational purposes only and is not financial advice. Always conduct your own research and consult with a professional before making any investment decisions.